Hey everyone, and welcome back to Investing Talk Podcast. Today, we're going to be talking about Soho House, ticker symbol SHCO. You know them for that luxury hospitality and exclusive members-only vibe. But lately,
Mm-hmm.
there's been a lot more to the story than just fancy parties and rooftop pools. We're
Yeah.
seeing some crazy stock swings, whispers, potential takeover, and a major hedge fund making some pretty bold moves. So,
Yeah, it's interesting how their recent stock performance has been so volatile, wouldn't you say?
yeah, definitely.
Take January 30th, for instance. They closed at $7.98 per share,
Yeah.
which is a dip of 3.74% for the day. But here's the picker.
Okay.
They actually hit a new 52-week high of 847 earlier that same day.
Wow, so we've got this roller coaster ride of a stock. What's the
Yeah.
takeaway for potential investors?
Well, it definitely points to some uncertainty in the market, but remember, uncertainty can often breed opportunity. And we can't ignore the huge spike in trading volume on January 30th. 882,092 shares changed hands, compared to their average of 498,241.
So a lot of people are interested.
That tells us a lot of investors are watching SHCO closely, trying to figure out what's next.
So are we talking buy or sell here?
Mhm.
What signals should we be paying attention to?
Let's zoom out and look at the bigger picture for a moment.
Okay.
Right now, SHCO is trading above both its 50-day moving average, which is 631.94, and its 200-day moving average sitting at 561.455. Now, moving averages are essentially trend lines that smooth out the daily price fluctuations. Think of them like a stock's report card.
Okay.
When the price is consistently above these key averages, it generally signals a positive trend, which some investors would consider a bullish sign.
So we've got some mixed signals, but overall, not a bad position for Soho House, right?
Right.
But no, let's talk about that hedge fund I mentioned, the one making waves.
Okay.
Dan Loeb's Third Point. They just scooped up a 9.9% stake in Soho House. What are the implications of this?
It's a significant development, for sure. And it's not just about the size of the stake, but the type of investor involved.
Okay.
Third Point is what's known as an activist investor. They don't just sit back and watch their investment. They actively try to influence the company's decisions, often pushing for changes that they believe will increase the value of their shares.
And it sounds like they're already making their intentions clear, right?
Yeah.
They're pushing for Soho House to put itself up for sale, basically saying the company's undervalued. And all this is happening while there are rumors of a takeover bid already on the table.
Right.
What's the latest on that front?
The rumors suggest a bid of around $9 per share was made. But there are analysts who believe Soho House is worth significantly more. This difference in perceived value is likely why we saw that 11% jump in the stock price
Okay.
back on January 29th. Investors are betting on a potential bidding war that could push the price up even higher.
So it's high-stakes financial chess right now, with Third Point applying pressure and potential buyers circling.
Yeah.
But it's important to remember, there's a real business here, not just a stock symbol being tossed around.
Right.
Soho House has a solid foundation with strong performance in its last quarter.
Absolutely. It's easy to get caught up in the market drama and forget about the company behind it all. And in Soho House's case, the financials tell a compelling story. In Q3 of 2024, they reported total revenue of $333.4 million. That's a year-over-year increase of 13.6%, which is impressive to say the least. And here's the even bigger news.
Okay.
They actually achieved a net income of $0.2 million, meaning they turned a profit.
That's a huge milestone, isn't it? It shows they're not just growing, but actually making money doing it.
Exactly. And this profitability, coupled with the company's unique position in the market, strengthens the argument that Soho House might be undervalued, making it very appealing to both investors and potential buyers.
Now, speaking of their unique position, let's talk about their bread and butter memberships. They've built their whole brand around this model, and it seems to be paying off.
Their membership growth is certainly a key indicator of their success. Recently, they hit a total of 267,494 members, with their core Soho House membership specifically up 13% year over year, reaching 208,078. This is a crucial metric for them because a growing membership base means a steady stream of recurring revenue and strengthens their foothold in this very niche luxury market.
So we've covered a lot of ground stock volatility activist investors, potential takeover bids, and some pretty solid business performance. Let's bring it back to our listeners for a moment. What does all this mean for someone considering buying shares of SHCO?
Let's weigh the pros and cons. On the positive side, you've got strong financial performance, impressive membership growth, and this intense takeover interest. All those factors combined point to a lot of potential upside. But of course, we can't ignore the risks.
Right. It's always another side to the coin. What should investors be cautious about?
Well, firstly, the market is inherently volatile. And right now, Soho House's Relative Strength Index, or RSI, is at 71.83. Now, the RSI is a momentum indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock. An RSI above 70 is generally considered overbought, suggesting that the stock might be due for a pullback.
Oh,
So investors should be prepared for potential price fluctuations. Secondly, Soho House is heavily reliant on a very specific market, the luxury sector. If the economy takes a downturn, it could significantly impact their business.
so a lot for potential investors to consider, but there's one more piece of the puzzle that's coming up, and it could be a game changer.
Absolutely. We can't forget that Soho House's Q4 and full year 2023 earnings are due out on March 15th, 2025. These numbers will give us a much clearer picture of their financial health and could significantly influence both the stock price and the trajectory of this whole takeover situation. Remember their guidance for fiscal year 2024 projects, total revenues between $1.2 billion and $1.25 billion, with adjusted EBITDA expected to fall between $155 million and $165 million.
So March 15th, a key date to mark on our calendars.
Yeah.
It's going to be fascinating to see how these earnings play out. But let's step back for a moment and talk about the bigger picture here.
Okay.
Soho House operates in this exclusive world of luxury hospitality, which has its own unique set of dynamics and challenges.
Right. It's a highly competitive market that has been significantly impacted by recent global events. The pandemic, for instance, really shook things up in the travel and hospitality industry.
Yeah, for sure.
While things are recovering, there's still a degree of uncertainty about the future.
And on top of that, you have things like economic slowdowns, geopolitical tensions,
Yeah.
all these macro factors that could affect people's willingness to spend on luxury experiences.
Exactly. So when you're evaluating a company like Soho House, it's crucial to look beyond the headlines and the short-term market fluctuations. You have to consider their long-term strategy, their ability to adapt to changing market conditions, and their resilience in the face of potential challenges.
And a big part of that resilience comes down to their ability to keep those members coming in right, to keep attracting new people, especially in a world where there are so many other ways to spend your time and money. How do you see that playing out for
And belonging among their members. It's not just about providing fancy spaces. It's about fostering genuine connections, creating unique events and experiences that people want to be a part of.
Right.
That's what sets them apart, and it's going to be crucial for their continued success.
It's almost like they've created a real-life social network.
Right.
Where the more interesting people who join, the more valuable the membership becomes.
Precisely. It's that network effect that makes them so difficult to replicate. It takes time, it takes careful curation, and it takes a deep understanding of what their target audience truly values.
So if we're thinking about this from an investor's perspective,
Yeah.
what should we be watching for?
Keep an eye on how they maintain that balance between exclusivity and growth. Can they scale up their membership without diluting the brand? Can they keep innovating and offering fresh experiences to keep their members engaged and attract new ones? These are the questions that will determine their long-term success.
It's a delicate dance, for sure. But let's get back to the financials for a moment. We touched on their Q3 2024 performance, but let's dive a little deeper into those numbers.
Absolutely. One of the most striking things is that impressive revenue growth. $333.4 million, a 13.6% increase year over year. That's a healthy clip, especially considering the current economic climate.
Definitely a positive sign. But revenue is only one part of the story. What about the bottom line? Are they actually turning a profit?
And that's where things get really interesting. They reported a net income of $0.2 million for the quarter. Now, that might seem like a small number, but it signifies that they're not just growing. They're doing it profitably.
And that's a crucial distinction for investors, right? It's one thing to grow rapidly, but if you're not making money, it's not sustainable in the long run.
Exactly. Profits matter, especially in today's market where investors are becoming increasingly risk-averse. Soho House's ability to generate a profit, even a modest one, is a good indication of their financial health and their ability to weather potential economic storms.
Okay, so we've got revenue growth, profitability. That's all good news. But where is that growth coming from? Is it all membership fees, or are there other revenue streams that are contributing?
While membership fees form the foundation of their business, they've been strategically diversifying their revenue streams. They've expanded into things like co-working spaces, hosting events, and even dabbling in retail sales.
So they're not putting all their eggs in one basket, which is always a smart move.
Well, exactly. This diversification helps them mitigate risk and makes them less vulnerable to fluctuations in any single market.
Now let's revisit those membership numbers. We know they've reached a total of 267,494 members, with 208,078 of those being Soho House members.
Right.
But how has that growth been trending over time? Is it accelerating, or is it more of a steady climb?
Based on the available information, it seems like their membership growth has been fairly consistent, with a year-over-year increase of around 13%. It's a healthy pace, suggesting that they're steadily attracting new members.
That's encouraging.
Yeah.
But I'm curious if they're aiming to justify a higher valuation, whether it's to potential acquirers or to investors in the public market.
Yeah.
Wouldn't they need to demonstrate that they can ramp up that growth?
I absolutely agree. Steady growth is good, but to really capture the market's attention, they need to show that they can accelerate that pace.
Exactly. That's something to keep a close eye on in their upcoming earnings reports. Can they maintain this current growth rate? Or will they find ways to kick it into a higher gear?
It's a key question that will likely be on the minds of many investors and potential buyers.
Now let's talk about something that can often make or break a company, especially when it comes to acquisitions debt. What do we know about Soho House's current debt situation?
Ah, yes. The D word. It's an important factor that often gets overlooked. Unfortunately, the specifics of their debt levels aren't readily available in our sources, but we can make some educated guesses based on what we do know.
Okay.
They've been investing heavily in expansion, opening new houses, and venturing into new markets. That kind of growth typically requires a significant amount of capital, which often means taking on debt.
That makes perfect sense. And I imagine that if they're seriously considering a sale, potential buyers will be looking very closely at their debt levels.
Absolutely. A large amount of debt can make a company less attractive to a potential buyer because it adds a financial burden and can potentially limit future growth opportunities.
So even though we don't have the precise figures, it's definitely something investors should keep in mind when evaluating Soho House.
Agreed. It's one of those underlying factors that could have a significant impact on the outcome of this whole takeover saga.
Okay, so we've talked about the financials, the membership growth, the diversification strategy, and even touched on their debt levels. But let's not forget about the people behind the curtain, the management team. They play a critical role in any company's success.
Absolutely. The leadership of a company can make all the difference. So who are the key players at Soho House and what's their track record like?
That's a great question. Let's take a closer look at the team behind the scenes.
Well, the founder and CEO is Nick Jones, and he's been the driving force behind the company's growth and success for decades. He's known for his creative vision and his ability to curate unique and engaging experiences.
So he's got the vision.
He's essentially the mastermind behind the Soho House brand.
Okay, but running a successful business takes more than just artistic vision, right? What about their financial and operational expertise?
That's where the rest of the management team comes in. They have a strong mix of experienced executives with backgrounds in finance, hospitality, and operations. They've proven their ability to manage growth, effectively control costs, and deliver strong financial results.
So it seems like they have a well-rounded team with a solid track record. That's definitely a positive sign for investors.
Absolutely. A strong management team can inspire confidence and provide stability, which is particularly important during times of uncertainty and change like what Soho House is experiencing now.
Now let's talk about the competitive landscape. Soho House isn't the only player in this exclusive world of luxury hospitality. Who are their main competitors and what are their strengths and weaknesses?
They face competition from both traditional luxury hotel chains and newer boutique offerings. On the one hand, you have the established giants like Four Seasons and Ritz-Carlton, known for their high-end accommodations and impeccable service. Then you have newer entrants like the Ned and the Wing, which are targeting a similar demographic with a focus on co-working spaces and social events.
So they're facing pressure from both ends of the spectrum. How does Soho House differentiate itself in such a crowded market?
Their key differentiator is that focus on community and exclusivity. They're not just selling rooms, they're selling a lifestyle, a sense of belonging. Their members-only model creates a barrier to entry, which in a way adds to the allure and perceived value. It's that velvet rope effect.
Right.
People tend to desire what they can't easily have.
It's a clever strategy.
Yeah.
But can that exclusivity be maintained as they expand? It seems like a tricky balance to strike.
Exactly. That's one of the big questions surrounding their future. Can they scale their membership base without diluting the brand and alienating their existing members?
So considering both the competition and their unique business model, what are Soho House's biggest strengths, and where might they be vulnerable?
Their strongest asset is definitely their brand recognition and loyal following. Their membership model provides a recurring revenue stream, which offers a level of predictability that many of their competitors lack. However, their reliance on a relatively niche market could be a vulnerability. If that target demographic shrinks or their tastes change, it could significantly impact their business.
That makes sense. And we can't forget about the broader economic climate.
Right. Economic slowdowns, geopolitical tensions, and shifts in consumer spending can all impact the luxury hospitality sector.
So how would you sum up the investment case for Soho House? What are the key takeaways for our listeners?
If you're considering investing in SHCO, remember that they have a strong track record of growth and profitability. They've effectively tapped into a powerful consumer trend, this desire for connection and community, and they've built a loyal following. But as with any investment, there are risks to consider. The luxury market is cyclical, and their dependence on a niche market makes them susceptible to economic downturns.
And we can't ignore the uncertainty surrounding the potential takeover bid,
Yeah,
how that might shape the company's future.
absolutely.
Yeah.
All of these factors need to be weighed carefully before making any investment decisions.
Well, we've covered a lot of ground today. We've explored Soho House's financials, their unique business model, the competitive landscape, potential risks and rewards, and even delved into the broader market trends that could impact their future. What are your final thoughts on Soho House?
Soho House is at a pivotal moment in its journey. They have a lot going for them, a strong brand, a loyal following, and a proven business model. But they're also facing challenges, including increased competition, economic uncertainty, and the looming question of a potential takeover. It's going to be fascinating to see how this all plays out.
It certainly will be.
Yeah.
As always, we encourage our listeners to do their own research carefully, consider the risks and rewards, and make informed investment decisions. And remember, this is just one perspective. We always recommend consulting with a financial advisor before making any investment decisions.
Absolutely. And for all our listeners out there, we want to hear from you. What are your thoughts on Soho House? Are you bullish or bearish on their prospects? Head over to the comment section and share your insights. We'd love to hear your perspectives.